In this video, we are going to learn two very important candlestick patterns which frequently form on the charts, and these are going to help you time your entries better and avoid the bad trades and take the good trades. We will understand the logic and reasoning behind this, why this happens, how it happens, and how this will help you in your trading. So let's begin. Now, see, I have taken two pictures. This is the chart of Likhita daily. You can go and see. And this is the chart of Umang daily on the day. Now we are going to discuss what happened after this formed and after this formed, and how do we have to deal with this? What do we have to do when we see such kind of candles being formed? So first thing, let's tackle this one that we see on the screen. And what are the candles that are forming that we have to pay attention to, and what do they exactly mean? Let's try to understand this one first. We'll take every single candle to understand and see. So let's see that you take this candle, okay? Now let's say on the left hand side there are good candles like this, the up move. So I'll represent that using a green arrow over here. Now you start contracting and see what will happen is when you are starting to contract, if in the first few candles, 3, 4 candles, when you are away from the moving average, it could be any moving average. For this purpose, I'll take the 10 moving average. So what will happen is when you are just contracting, you will be a little away from the 10 moving average. And let's say there happens to be a candle which looks like this that I'll show you now. So let's say it looks like a candle which looks like this and has element of long wick, right? On the downside, something like this. Okay. And it also can have some element of wick on the upside, but that is something we are not trouble with. What is important is there is a long wick. Relatively, there is a long wick on the bottom. And you are still away from the 10 moving average. So let's say I use a blue line for my 10 EMA. What will happen is, let's say your 10 moving average is here. Now, try to understand. This is where you have closed. This is where you have closed, right? And this is where the moving average is. There is a lot of distance, which means if I buy here, I cannot have my stop loss anywhere here, right? What if the price comes to the 10 moving average and then goes up, and this is a region of demand. So there is no point having the SL here. So first thing, if you're buying here, the SL is big. Now the other thing is you can have a lot of rib candles in between these 2 points. So let's say tomorrow you have a candle looks like this. Then again, the next day you have another candle which is like this. Then another day you have a candle which looks like this. And everything is happening between this point. But how does this affect us? How does this lead to a bad trade here? If you take a note, look at the moving average. The slope was going from up positive to flat, right? Because the contraction has started here, due to which the 10 EMA slope is turning flat. Now, try to see this candle and imagine what this would be if I take, for example, this as my daily time frame, how this would look on 15 minutes or hourly, if you try to imagine. So let's try to see. One thing is for sure, towards the end of the day, towards the closing, or on the right hand side, there will be an up move or a good single up move candle. That's true on the hourly or the 15 minutes for this daily candle, because this is how you have closed. You cannot close with a big red candle in such scenarios towards the right hand side. So how this could have looked like? I'll draw one scenario, that you had a down move. We'll use a shape here. So let's say when you opened, the market actually went down, okay? This is how it looked. And then you probably went sideways. And then you had either an up move, either you had an up move like this, and then you again close like this. Or instead of this up move, you can also have a good green candle, right? Either of these things can happen, but that is for sure that this is how the right hand side is. Okay. Now, see, the green move has happened. That's all right. But after all this, what is happening is these three down days. Now, what will happen is this single up move positivity that came in the stock, the bullishness that came in, will make what? The up move from the moving average from flat to keep it just flat or little uprising. But then, because of these 3 days, your moving average will again go from being a little up to flat or from flat to down, and which will reduce the support that your EMA was giving to you. And that is a trouble when you deal with these candles early on in the contraction. But now, just imagine the exact opposite scenario that you had your contraction, which started with these candles, and when you approached the 10 EMA, that is when this candle came in. How would the things change? Let's see it. So you have an up move, and then you have a contraction which has these candles. This is how your contraction started, and you started going down. And now you are at 10 moving average, let's say. So I'll draw the 10 moving average. And it was going up. Here it started turning flat and a little down by the time you're here. Now, this candle appears. Now, what this candle will do, I hope you can visualize a little bit of what it will do. Exact same thing, you'll have a deep wick on the downside. There can be some element, I'm avoiding it. Now, what will happen is, let's say you have few more inside days after this candle. You have an inside day here, and you also have another inside day over here. Now, all these things are happening within this region, right? Now, try to understand what was happening. The moving average was flat or down because of these down moves. Because of this candle, it will have element of this. This will make your moving average as if it was from flat to a little up, or if it was down to a little flat. And then the price is staying within this. That will further give support to the downfalling moving average to make it into a flat zone. Or if it has turned up, it will keep it turned up and little flat. That's the difference. And you will see this sort of shape happening if then, the stock decides to go up. This will start happening. So you see, this is a very small detail, very small thing, but will actually help you a lot. Because you can see all these three candles are within this, but they all are closing below each other, which will lead to further worsening of the moving average. In this case, you already had a flat down moving average because of these, and then you are getting a bullish scenario, which will help to make your moving average turn up or go to flat, and that will give support to the falling price. So this is a very small detail that you have to see for. And the exact same thing is here. It's just that this is a different kind of candle. And the best thing about this is, see, these candles, you will see, will have open equals to the low, not even exact, not even slight difference, but at times you will see the open will be equal to the low. You will see in these cases. The best buy area in these cases will be this region around the low of this, and you can clearly see it. And how this also happens, if you take a note, price was falling down and then this candle happened. Now, this is such a good bullish candle in the scenario of downfalling. In this case, now, even if you have three candles closing now, that will be not a problem. Why is that? The answer is in this candle. Now, I'll tell you what. If you take a look at this candle and this candle, there are a lot of differences. See, when we were dealing with this candle here, what was happening? We always had an element of down move, either through a single candle or a series of candles. In this candle, you will see since the open and low is the same, there is one thing for sure. The price at which the market opened, the price never went below that. And usually in these cases, if you will check the 15 minutes or the hourly, there'll be one scenario only. And that will be that there was a good candle, a good green candle like this. And, after that, price basically was just coming back. That's about it. So basically, this candle itself doesn't have any element of bearishness, right? But this one had, which means this will give much more support to the moving average. Let's say because of these three, the moving average turned flat. This will make it much more positive. And because of which, even within this candle, even if you have three consecutively falling candles or three or two, that won't impact the moving average as much. Why? Because this candle has taken care of the slope. It has given it much more upslope than this will ever give. So you see, that is the slight difference. And that is why you will see that usually the best trades that you have seen will have the presence of these candles somewhere, between 10 and 20 moving average or between 20 and 50 moving average. And the best buy zones will be around the lows of these. So do take care of these. And that is why, where the candles are happening, which is the topic of location, right? If you can see on this, two exact same candles with the exact same hourlies or the 15 minutes will have entirely different meaning. Just because of a one simple fact that where those candles were formed, right? And then these candlesticks also do the same thing, chain and slope. But the way they do it, how do they do it, is again of a lot of importance. And see, after a down move, if you're having these candles within the contraction from where this contraction started, that is always a good sign. I don't want this candle to be forming right here, crossing above the high, because then that becomes a part of the expansion. And then that simply means that the expansion was weakening. So this is important for us to understand here. I hope you are able to get the point that I'm trying to make here. So these two candlestick patterns, if you may allow so, because I don't use patterns or anything, but just to make you understand these things, will help you a lot in the trades that you're taking, how you are taking it. And I'm sure if you will deep down into this video itself and try to see few more charts through the things that you have learned, this will help you. But do take care of the point that the candles that this you see the pattern kind of there's a good candle and then the candles are falling down. This should happen within the contraction only, then only it makes sense. Otherwise it becomes a part of the expansion, and when it becomes a part of the expansion, you will usually see that the low will be breached with a red candle or something. In those cases you don't have to buy. I hope you won't make this mistake. But the question is why are you saying that? I'll tell you again. uh, Although now this video will extend, but I believe that's how it happens with every video of ours. So let's say you have a green candle, which is basically this candle is this, okay? And then let's say you have a candle. So I'll basically replicate that exact drawing here. And then you have this. Now let's say you have a red candle like this, which brings the prices down. And after this, there is another red candle, a little smaller. And then you have this candle, but this does this, and which will be like this. Now, this is part of the expansion, right? It has made a new high. What problem has it created? Now, what if you say that's a what if now uh, this starts happening? The exact same drawing, which is happening over there. What if this starts happening now? Then what is the answer? What will happen? How do I understand this? Should I take this trade? Should I buy this candle that I'm drawing right now? And in fact, what you will see, usually what will happen is this will happen. This low will be breached. And the question is why? Why did this happen? What happened over here? Over here it worked. Over here it did not. Although, if I see the pattern which is circled here and here is the same. The answer is what happened over here? This candle you saw, because of this, relativity kicked in. Because this is a part of the expansion. Relativity kicked in. And it made the price go further away from the moving average. This was taking you away from the moving average, right? Till this point. This one made this high, took you further away from the moving average. So, because of these, there was a slight, let's say, dip in the moving average, but this made it like this again, which made the price much above the moving average, which this one did not, because that is still a part of the contraction only. So, what this one is doing is, this is keeping either the upslope as the upslope only, or turning the flat into the upslope. That's all it is doing. But this one is further taking the price away from the upsloping moving average because it is the part of the expansion now. And that will make the relativity kick in, and this will be breached and won't work. Then what will happen? Then you will see, then there is another candle, which is green in color. And then probably you will see the same pattern repeating again here, which this time will work. And why will that happen? Because now you are part of the contraction. Now the job of this green candle will be to make the moving average upslope or from downslope to a little flat. That's what it'll do. Excuse me for this candle, but you see, and the next candle you will see will be a good green candle, and you will be thinking, I don't know what happened. It was not working here, but it's working now here. So I hope I have given you the answer for this, that why it should be within the highs. And if it is not, what will happen? I mean, I'm sure you can see it on the charts if you practice well. So do take care of these things. I was discussing with my traders today morning. So this point came up, and this is so important that I thought I'll just make a video and share this point with you. So make sure you revise this, you keep revising this. And if you keep doing that, I'm pretty sure you'll start seeing good trades, you'll start finding the good trades.